Hello and welcome to today's live webinar where we look at ASX investment opportunities in review. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances, and realise that not all investments are appropriate for every individual. The technology I'm going to be working through today is the Asx Signals members area. You can get access to the technology for $1,320 for 12 months. After that, it drops back to $110 a month as a monthly subscription rate. And if you'd like to start a trial, you can visit the Asx Signals website, click on free trial, or if you're ready to sign up and you'd like some assistance with getting the account in place, either email or call the office on the 1300 614 002. Moving straight into a graph of the XJO, and I think if we start with the sort of macro backdrop for equity markets, we've essentially gone from oversold conditions in August, starting to push up towards slightly overbought conditions. So what you'll note as we go through a number of the stocks today is that for the most part they're already fairly extended from the last round of algorithm buy signals, but there certainly are opportunities that low risk opportunities that we're focusing on in the market at the moment. US earnings season, so the September quarter earnings results are coming through. US earnings have mostly been flat for the last 9 months, and the market keeps pushing out the hockey stick recovery in earnings. So whereas the December quarter the market was looking for about 8% earnings growth in the US, that's now been pushed out to the first quarter of 2020, and what we're seeing is those uptick in earnings estimates starting to moderate, where analysts are actually bringing down sort of that expected earnings growth as well as pushing it out in time. Central banks remain a significant backstop or support to global equity markets, and we think for that reason, even in an environment where earnings growth is at low levels, as is global GDP growth, we're probably likely to see equities remain closer to the top range of this level here in both our local market and in international markets. So the first step today, look, we'll go in and click on watch list. We'll review the stocks that have been put on the blog. So if we come down here, click on recent blog posts ASX, stores the last 30 days of stocks that have been posted on the blog or tagged on the blog. The way I like to look at this list, I get the percentage gains to the top, organize it by signal as well, where I've got the percentage gains but only looking at buy signals. So then I know sort of towards the back end of this list I'll then start be looking at ones that are undersell signals. So Oceanic Gold, something that's just worth pausing and thinking about at the moment is we've had a fairly substantial correction in gold prices as we've seen interest rates start to move up in the US, and that's really just an expectation that central bank policy gets rid of the worst case scenario where we see another global recession, which was being priced into markets 2 or 3 months back. So as those interest rates in the US have pushed up, and it's only marginal levels that you've seen, for example, say the 10-year yields move back up towards around 1.8%. Gold's come off in that environment. So Oceanic Gold's one to have a think about. A number of analysts have upgraded Oceanic Gold, and you're starting to see more coverage of it. So support down here at around 350 is really what's been highlighted there on the blog. ResMed, so this switched from sell conditions to buy conditions here at around $13. The stock's now pushing $21. It is expensive, trading at about 30 times earnings on less than 1.5% dividend yield, but the company is delivering mid-teen earnings growth, and they're likely to continue to do that. So, ResMed's a bit of a standout in the context of earnings growth within that healthcare space. So one to have a look at certainly on the next pullback and the next algorithm buy signal there. Webjet got a little bit oversold, was our view here at around $10. Looked oversold to us. Appears that it's going to trade back up to around $12.50, probably run into resistance again there. Silver Lake Resources, so support here at 90 cents was the highlight of the blog post, just bringing this one to your attention. BHP, so this is where we get into our theme at the moment, which is we're more interested in high quality concentration within portfolios. So BHP certainly sort of fits that bill. So if the market's going to continue to squeeze a little bit higher, BHP will be a beneficiary of that. We think the resources broadly are more attractive than the banks at the moment. So BHP and Woodside stand out to us as opportunities in the market right now. So being long BHP. Amcor, this is a high conviction buy. The struggles with Amcor have really been, we've seen concerns around a slight slowdown in consumer spending, which feeds through in a backdrop where you've got lower global growth, concerns about sort of what the demands for packaging and retail sales, also combined with a backdrop where the use of plastics and excessive unnecessary use of them has started to get some exposure in the media, and so from a sentiment standpoint, I think short-term things soured a little around the enthusiasm for Amcor. They have completed the merger with Bemis Group in the US. There's about $180 million of cost synergies that'll come out of that. The share buyback that Amcor is conducting, a $500 million share buyback. They've been in a blackout period, which around their earnings result, which has prevented them from carrying on with that share buyback. They had started it about 6 weeks ago, but only a fraction of that 500 million had been spent. So our base case is that as the company recommences that share buyback program, and we get an initial announcement out of the company around the post-Bemis cost synergy savings being confirmed, we should get a period where even if all things else being equal and earnings growth remains sort of at fairly low levels, we should get a period where the Amcor share price can rally back up to around $15 or $15.50. So it remains on our high conviction list, and we continue to see it as a buy opportunity here at around $14.20. Transurban pushing into the December dividend. So a little bit of softness here around interest rates pushing a little bit higher in the US, but the strength of the 4% plus dividend yield, plus coming into the payment period where the market really is rotating into names ahead of dividend periods. Transurban, GPT, some of the real estate investment trusts, Sydney airports, etc., expect them to remain reasonably well supported coming into the December dividend. Don't really see upside potential for Transurban too much above $15, whilst US interest rates are moving slightly higher. A2 Milk just highlighting support down there at around $12. A2 Milk delivers earnings growth at around 20% per annum, but you're not getting a dividend yield. Analysts are forecasting 2 to 3 years out the company begins paying a dividend, and they have it on about a 3% yield, but again that dividend's not coming through for a couple of years. So it's a growth story here with A2 Milk. It's corrected from $17 down to $12, and it's worth just keeping it on your radar and maybe watching those shorter term indicators. So I'll continue to update you on the blog around that. Sydney airports, were being bullish on Sydney airports. For the most part, we've taken profit now on this trade. Maybe GPT and Transurban probably have a bit more upside potential into that December dividend. Now that Sydney's already rallied 10% over the last month or so. Downer EDI, so we like this. We had the algo buy signal here at around $687. It's now pushed up to $8. We can't do anything with call options around Downer, so we've taken profit on the stock and happy to take a look at it again on the next sort of sell-off period in the market. Woodside Petroleum, so along with BHP, Woodside, we have a strong bullish bias towards this at the moment, and I think that it's one of the more attractive opportunities in the market, so being long Woodside. Northern Star, so again, bringing your attention to these gold names that have corrected. So we've seen Northern Star correct from $14 back down to $10, just below $10. Goes ex-dividend tomorrow, 7.5 cents. The short-term indicators are just starting to turn positive. We're effectively now back on sort of the support, which was the old resistance range through here. So just watch this and expect it to find some support there at around that 950 level there post the dividend tomorrow. GPT comes into their dividend late December, delivering about 5% earnings growth, and we continue to see maybe upside potential up to about 650, not too much above that. So you could look to sell covered calls to enhance the returns there. But GPT is one of the more attractive opportunities within the REIT space at the moment. Newcrest corrected from $39 down to $32. Looks like it maybe could go a little bit lower, Newcrest, so our preference is leaning towards North Star over Newcrest at this point in time. Evolution is obviously an attractive opportunity as well. As is Gold Roads, and we'll have a look at those as we move through. So Evolution, the benefit here with Evolution is a 3.5% dividend yield opposed to much lower yield levels in Newcrest and North Star. So from a order of sort of risk point of view, Evolution seems to probably provide the lower level of volatility. North Star probably provides more leverage to a recovery in gold price, I think, given the sell-off that it's had. So they're the two that are that we're focusing on, and then obviously Newcrest if we see that a little bit lower. Telstra. The opportunity with Telstra may still yet to be really play out, and that's further confirmation from the company around their strategy of whether they separate the infrastructure assets from the retail side of the business. Now, the company's done that internally, but do they push forward with that and lay out sort of a clear time frame to the market? If they were to do that, I think that unlocks value for shareholders. In the absence of that, Telstra should grind higher, but there doesn't appear to be any catalyst to really drive earnings substantially in the short term beside that corporate action that I just spoke about. Dexus, so just highlighting that it had a reasonable correction from $14 down to $11.50. It's really bounced from those oversold levels at the moment. Dexus have their AGM later this week. I'll just bring into screen here the calendar. So Domino's today, Bendigo tomorrow, Coles have sales, Dexus AGM on Wednesday is of interest, Woolworths sales, ANZ reports their earnings results on Thursday, GPT has sales, Iluka's production update will be interesting just to have a look at that, Rio's strategy day, CSR not so keen on the housing stocks, Macquarie at the moment they report Friday, and Orica, so they're the results that we keep an eye out. So Dexus on Wednesday will be interesting to see what comes out of that AGM. Medibank, this is really an income opportunity for portfolios. We don't see too much in the way of earnings growth, but a little over a 4% dividend yield, fully franked, owning it, selling the 350 covered calls, driving about 10% cash flow. Altium, high growth name here, trading on, from recollection, close to 40 times earnings. The history of the algorithm signals performed well here when we consider it switched from sell conditions to buy conditions here at around $19, and it's done a good job of picking up the lows. The most recent signal there was around $30, and we just see this 32 level as something that holds, given that still the backdrop that's driving confidence and global growth is obviously the strong growth within the technology sector, in particular in the US. Ramsey Healthcare, so we had this as a buy which we posted on the blog there at around $60. We've mostly taken profit on this at the moment and are no longer holding Ramsey, but we'll take another look at it on a pullback in the market. Similar story here with Brambles. We owned it at lower levels. We've taken profit at the moment, and we'd have a look at Brambles again, sub $12. ASX, expensive by historical standards. It's down to less than a 3.5% dividend yield, but the company is growing earnings at 5%, which is attractive with a fully franked dividend. Owning it and selling call options over it, again, it's a strategy to bring in sort of near 10% cash flow. Invocare, just keep this one on your watch list. May come back down and sort of test $13 or even sort of 13 to 13.25 type level. So we're just looking for slightly lower test of that prior low there, and then you may want to take a look at Invocare, so we'll update you on the blog from a timing standpoint around that. Insurance Australia Group switched from sell conditions to buy at around $8. We see its full value, so again, we've either taken profit on this or sold covered calls to enhance the income. Magellan Group, just back on support, just highlighting that around this sort of $45 level, it should find support. We continue to sort of see for the moment the US equity market being well supported. So Magellan should be a beneficiary of that and have the capacity to have another rally off that support level. St Barbara, so was under sell conditions here at $4, now pushing down to $2.70, not doing anything there. Domino Pizzas, I'll just highlight that there's a price gap here up to $55. I just find the valuations too stretched here, and the dividend yield just doesn't support a $50 to $55 price range. For the moment, the stock certainly has momentum to the upside. We just need to watch it just to see whether it starts to tire at around that $53, $54 level, and I could see that trading lower on the short side. Commonwealth, so you're coming into bank earnings results, so you've got ANZ this week, Macquarie on Friday, Westpac I think around the 4th of November. If you're looking for short opportunities in the market, Commonwealth and Westpac are certainly ways that you could play that. So we think that ANZ is probably the more attractive opportunity, but on the short side, just I've updated commentary on the blog around CBA and NAB. Gold Road Resources is a smaller cap opportunity within the gold space, and we're just keeping an eye on that. Cleanaway Management, so not very often do we go long a stock against the algorithm engine, so Cleanaway's under sell conditions. We were fortunate here where we purchased Cleanaway at around $1.90, $1.95 type range, and we got out of all of it at around $2.08 to $2.10. The sell signal for the algorithm came in at 3:30 this afternoon on this particular day, and then the following day the market gapped down following Cleanaway guiding at their AGM that the earnings was simply going to be flat on the same time last year, and the market had been pricing in almost 20% earnings growth for Cleanaway. So whilst it was not a miss in the sense that the company's not growing, profit going backwards, it was just that there were high expectations priced into the stock, and we're now facing an environment where the company's saying cost cutting and focus on operational sort of matter issues should return the company to profit growth in the second half. So I think that's probably enough reason just to give this a little bit more time to wash through how the market sort of reprices Cleanaway, given that it is on a low dividend yield, only around 2.5% dividend yield. So in the absence of earnings growth being confirmed at least 10%, you would have to say the stock's a bit overvalued. So we've been fortunate to trade out of that ahead of the AGM result there. But it stays on our radar, and we'll just continue to sort of see how price behaves in the days ahead. And there we are back to OGC. So that was moving through the signals from the blog. I'll let you sort of do this one in your own time, but toggling through the ASX signals, that stores the last 7 days of signals. So again, you can get these in order of percentage gain, get all the buys to the top, toggle through those, and that'll show you the signals from the last 7 days. What I wanted to cover in today's opportunities in review is we're going to go into the model portfolio. We're going to shift it to the ASX 100. We get the days held to the top, which is the least number of days held. So what this tells me is in order of days held, Bank of Queensland's been in the model 7 days, Flight Centre's been in the 18, Coca-Cola's been in the 24, etc. So I could also arrange it by percentage. So that's the worst performing stock, that's the best performing stock, so I could view the list in that order. I could equally view it in alphabetical order, but I like to have the least number of days at the top. And let's just move through these fairly quickly because I also just wanted to cover a little bit on the US model in today's recording. Bank of Queensland's been added, so what we're starting to see is the stock breakout, make a higher high, higher low, and we're just seeing some volume come in here on the lows, and the algorithm models just added BOQ into the top 100 model portfolio. Flight Centre at the moment was added in at around $40, and the stock's marginally higher. Coca-Cola, so add this one to your watch list. I think Coca-Cola at around $10. I put a post on the blog today. To me, the stock provides a defensive characteristic if volatility picks up in the market over the next 2 to 3 months, and around $10 provides a reasonable, puts Coca-Cola on about a 4.8% dividend yield. So buying it on this sell-off and looking for a move back to around 10.75. Atlas Group was under buy signal there at around 7.50. Stock now pushing $8. Mirvac, analysts are starting to upgrade the earnings outlook here for Mirvac. The algo engine added it into the model at around $3, and it's around 5% higher than that. Newcrest. So if we have a look at where the support range here is Newcrest, you'd have to say $30, $31 is support, and maybe 32. So it's back into a range where we should start to see support develop. We haven't taken any action in Newcrest. We're looking for a move maybe back down to $31 as an entry level. North Star, we've started to set up long positions in that at the moment. Ramsey Healthcare, I spoke about this one. It was added into the model portfolio. And just to explain the difference, so in the managed fund, we buy the stocks when they switch from sell to buy conditions, and we hold on to them. In individual client accounts, we're managing the positions on a shorter term time frame. We're using call options to enhance the returns, and we're doing a bit more trading in and out, given that across most individual accounts can't be holding sort of 40 or 50 or 60 stocks, which is what's in the model at the moment. So in the case of Ramsey, it remains in the model portfolio, but as I spoke about earlier, we've traded out of that one. Telstra added into the model, and if you just sort of step back and have a look at what's happened here, after a long downtrend, the stock's broken up, made a higher high, higher low, and we're seeing support at around 355, and Telstra's in the model for that reason. As is with Brambles, we're starting to see an uptrend develop, and it was added into the model portfolio there at around $11, and the stock's now pushing up towards 12. Just to backtrack there on Brambles, so if you're not aware, we're really looking at a leaner, meaner Brambles business now as they've spun off their plastic pallet pooling business, and the company's guiding towards 5% revenue and profit growth. So again, in a market where not that many companies are delivering fairly predictable earnings growth, Brambles becomes attractive. It is expensive, so it's on less than a 3% dividend yield. So buying it on a pullback at sub $12, we're comfortable with that, or holding at this level and selling call options just above the market there to bring in extra income. So NIB Holdings was added into the ASX 100 recently, and it's now under buy conditions as well. As it pushes up, creates a higher high, and we're seeing support there at around that 690 level. APA, yield sensitive name. This is the gas pipeline business. You might recall that Hong Kong company made a takeover bid and it was blocked by Australian government. It switched from sell conditions to buy conditions there at around 10.30, now pushing 11.70. Bendigo Bank, so it's switched to buy conditions as well at present. Coles, so it was under algo buy conditions there at around 13, now pushing 14.60. Both Coles and Woolworths look expensive to me, and you probably want to wait for a pullback in those. Lendlease, so a really interesting story here with Lendlease. They've signed a deal with Alphabet, which is Google in the US, to build, I think the number's something in the order of sort of $24 billion, maybe US, of housing, as well as they've got the Barangaroo project coming online over the next couple of years. Probably approaching expensive levels, but right at the moment, the positive sort of news flow about increased work in hand could see Lendlease in a strong market sort of test $20. Following that, I'd expect it to run into resistance, and over the next 6 months, really any pullback in this and an algorithm buy signal would be an opportunity to continue to build exposure to Lendlease. We quite like the thematic there over the next sort of 3 to 5 years. Transurban switched from sell to buy conditions there at around $14. It's pushing higher. Coming into the December dividend should remain well supported. So I think Transurban should be a stock in your portfolio. Cochlear supported around 200, so it's under buy conditions there. Medibank Private switched to buy conditions. Early came in there at around sort of 330, had further confirmation there at around 320, so it's pretty much break even as to where the original signal was there in Medibank, and I covered the earnings outlook when we looked at Medibank earlier. Rio Tinto, so we certainly like this. Our preference, if we're having to make a choice, is BHP over Rio, but we do think these resource stocks is where the upside opportunity in the market is, rather than in a strong rebound in the bank stocks. So Rio we could under buy conditions, and it's a holding in the model portfolio. Fortescue switched to buy conditions, and stock now pushing around $9. Again, our preference BHP over Fortescue. AusNet under buy conditions there, the original signal at around 170. Amcor, so this is high conviction. Again, the interest here is the share buyback that recommences and the cost synergies from the Bemis acquisition, and we're looking for Amcor to push back up towards $15. Downer EDI, we like the sector that Downer operates in. We think governments globally continue to support global economic growth through increased infrastructure spending. We're especially seeing that in Australia, and Downer EDI along with CIMIC are beneficiaries of that. So when we think about sort of Lendlease, Downer, CIMIC, they're all stocks that you want to focus on and continue to buy on the dip when we see future algorithm buy signals in these names. Magellan Group under buy conditions, so it's in the model at the moment. Insurance Australia is in the model. A2 Milk is also in the model. Sydney Airport, we've covered that one, support at $8, starting to get a little bit expensive. AGL, it's hard to get excited about AGL. I think we've had a big adjustment in earnings to the downside, and the dividend yield is attractive, but it's hard to see where the earnings growth comes from. So base case is AGL mostly moves sideways, and we'll continue to look for more clarity on what that earnings growth picture looks like with them. Oz Minerals, so again, preference BHP, Woodside, and within the ETF space QRE, so I'll cover that towards the end of the recording. But Oz Minerals, mostly copper, small part gold, expanding their production substantially over the next few years as new mine expansion comes online. And for that reason, we're buyers of Oz Minerals on any pullback. So look for a correction in the market over, as moderate as it may be, over the coming weeks or month, and then take a look at Oz Minerals, and we'll update you on the blog when we see that opportunity. But we think the story remains attractive there for Oz. NAB in the model portfolio switched from sell conditions to buy conditions there at around $23, now pushing $29. BHP, we see value down here and think the BHP can push higher. Spark Infrastructure, there's one just to have a think about. It's oversold down here at around $2, but we don't see it doing too much on the upside. But in percentage terms, you could see a move from sort of $2 back up to $2.20. And it's in the model portfolio. QBE Insurance was added into the model back here at around $10, now pushing $12.50. Woodside Petroleum's been in the model for a while now. So again, just to be clear, when it switches from sell conditions to buy is when it gets added into the model. The red and green arrows are secondary signals for shorter term trading. So we're getting confirmation that it's under buy conditions, and we're getting the shorter term buy signals saying that the stock's pivoting higher. Cube Holdings switched from sell conditions to buy here at around $2.30, and the stock's had a terrific run up to $3.30. Goodman Group, so we like this. It's expensive within the real estate investment trust, but our preference remains GPT and Goodman. From a yield standpoint, Scentre Group is attractive. Goodman Group's one of the few real estate investment trusts that's delivering high single-digit earnings growth, so up around 8% earnings growth. So after the correction that it's had from 16 back to sort of 13.50, we're starting to see the stock recover, and there's probably more upside potential ahead for it. Macquarie was added into the model portfolio, and after consolidating for almost 12 months here at around this 120 level, we're now starting to see a little bit of a breakout higher. Macquarie report earnings on Friday, so it'll be interesting to get a sense of the company's guidance, where they said that we're unlikely to see earnings growth on the same time last year, which caused the share price to correct from sort of 130 back to 120 last time. Gradually, the market's confidence in the earnings outlook for Macquarie has improved, but probably you don't see it much above that sort of 135, 140 level before it runs into resistance, but it's certainly a holding in the model portfolio. GPT was added after it switched from sell conditions into buy here at around $5, and the stock continues to push higher. And ResMed we've already covered. ANZ, so the standout for me is ANZ and Macquarie within the banking space, and ASX as a play within those financial services. Dexus, we covered this one. It was added into the model portfolio at around this $12 level. Had a correction from 14 down, and we just see support developing there at around $11.50. Scentre Group, the company's still carrying on a fairly substantial share buyback, which underpins the downside risk. The yield's over 5% on this one, so owning it and selling $4 covered calls, you're not getting much in the way of capital growth, but you're bringing in over 10% cash flow from the dividend and the call option income. Woolworths, expensive up here at the moment, and we just want to see sort of a sell-off in the next algorithm buy signal before we add back into Woolworths. But if we look at the history of the algorithm, it switched from sell to buy here at around $28, and we had further confirmation of buy signal at $31, but it's getting a little bit overbought relative to where that signal was. Seek's under buy conditions, but for us starting to look a little bit expensive on a short-term basis. Altium, I covered that earlier. Evolution, I think we covered that. REA Group is in the model portfolio. JB Hi-Fi, this defies gravity. For a while the market's been concerned around consumer spending in Australia, but you've seen it switch from sell conditions to buy at 22, now pushing 37. Well and truly has broken out, but into the early part of the new year, if we were to see a pullback back down to around $30, you would see another buy signal there on JB Hi-Fi. Charter Hall switched from sell to buy there at around $6, now pushing up towards $12, so continued sort of strong pattern there of higher highs, higher lows. ASX under buy conditions, we've had the most recent signal at around $78. And as I've discussed, the stock is expensive, but the story is attractive there with ASX. So within the financial services sector, it's still one of the more appealing opportunities in the market. Northern Star, so the gold stocks have corrected. Start to keep these on your radar. It feels like you probably see some level of buying start to build in gold after it being a little bit oversold. But really, the catalyst is, do we get a slight pullback in US equities after earnings season's finished? And we're coming into a busy part of US earnings season, this week and next week, where you're seeing technology and multinational industrial companies report. So assuming those results are okay and the US equity market pushes a little bit higher, you may just see a little bit of profit taking on the other side of the earnings season, which should set up a backdrop for gold to do better. CSL has done extremely well. It was originally added into the model portfolio back at around $100 in 2015. Bank of Queensland, we've covered that. Flight Centre and Coca-Cola, and so we're now getting back towards the beginning of the list. So they're all the stocks. So out of the top 100 companies, these are all the names that are in the algorithm model portfolio. From a sector standpoint, you can have a look at those. You can see which one's doing the best in percentage terms relative to the others, and here's where all the positions have been closed out and the percentage gain, the number of days it was held, and the returns include the dividends over that holding period. I just want to also cover off, because we're starting to do a lot more in the US market now through Interactive Broker. So again, we can set up a individual broking account for you using Interactive Broker and start to add positions to your Interactive Broker account based around the algorithm signals that we're seeing in the US market. So again, we get the least number of days held at the top. And I'll just move through these fairly quickly just to give you a sense of some of the performance in these. So Procter Gamble just delivered their earnings results, surprise to the upside. We had the buy signal there at 115 and it's pushing 120 plus. Eccentric Group, so under buy conditions, recent addition and performer within the model portfolio. American Express, so part of the focus in this Interactive Broker account is that we focus on the companies in the US that are doing large scale share buybacks. So American Express is certainly doing that. You think of American Express as maybe a brand that's not appealing to millennials, but it still is the fastest growing credit card even within that millennial market space. So the outlook for American Express, supported by the fact that they've bought back almost 50% of their shares on issue over the last 10 years. It's a substantial holding within Berkshire Hathaway's portfolio. So right at the moment, we're attracted to American Express, and it may be something that's we just see from sort of 118 back up to maybe 130 as the target there on the upside with American Express. McDonald's, we've got this one on our watch list. They disappointed a little bit, like Woolworths, I suppose. McDonald's is priced to perfection for what historically has been a relatively low growth company. It's trading on a very high PE, obviously, as the market's searching for safe yield. The earnings result disappointed a little bit. If we were to see this sell off and come down to sub 190, we think that's a buying opportunity there for McDonald's. American International, AIG, I'll just move through a couple of these rather than cover them all. So AIG is the mortgage insurance company that is owned by the US government. Honeywell, so space and defence technology. So Honeywell's an interesting story. AGN was added into the model portfolio. Capital One Financial, so within the banking finance space, was added into the model there around 85. General Motors, so interesting. Ford's under sell conditions, GM's under buy, but not really one that Goldman Sachs, so interested in this, for the same reasons that we're interested in Macquarie. We just see growth within sort of the investment banking space, and Goldman Sachs is trying to pivot a bit more into traditional banking as well. And that's sort of a 3 to 5 year strategy for the company. But we see support there at around 200, and so Goldman Sachs pushing a little bit higher. Charter Communications under buy conditions there at around 370, now pushing 460. Booking Holdings was under buy conditions at about 1700 a share, now pushing over 2000. So GE is a fascinating story in corporate American history. Can it recover? The new CEO is taking substantial steps to sell down assets, trying to clean up some of the company liabilities, and we've just had it switch from sell conditions over the past 2 or 3 years now into buy conditions. So we'll watch this. It's possibly in the early stages of a recovery underway, and I would imagine once there's that sort of tipping point, that once there's a surety that the liabilities can be dealt with, we may see a fairly substantial long-term uptrend. So it's just one you want to keep an eye on and see how that develops from here, and just keep an eye on whether we get subsequent algorithm buy signals. Qualcomm in the model switch from sell to buy, and it's a positive contributor to the portfolio, as is Amazon, although we just saw the market slightly disappointed with the latest earnings result last week from Amazon. But history sort of tends to tell us here that buying into these dips on Amazon delivers returns longer term. Gilead Sciences disappointed the market a little bit there. Raytheon, so this has been one of our high conviction ideas in the US, and we were originally attracted to this idea on the basis that they were announced an intention to merge with United Technologies, which would make one of the biggest aero defense contract companies in the US, bigger than Boeing. Raytheon has a particular set of technologies, as do United Technologies. We think the merger of those two create obviously a wider product opportunity for the US defense, and the cost synergies that come from the merger, combined with the commentary from the CEO of the company that they're going to engage in a large share buyback post the merger, we think it underpins the story for Raytheon, not only on a sort of 6 to 12 month view, but even much further out from that. There are some risks that maybe if the Democrats got in, maybe at the margin defence spending is not as strong as what it is under the Republicans. So there's a couple of things there just to keep an eye on, but the buy signal from the algo here was around 170, caused us to have a closer look at the fundamental story there, and move to a high conviction call on it because of that corporate action with United Technologies. So within the interactive broker accounts, that's been one of our most overweight positions within the US market, and that's done very well. Celgene has done well, as from 90 up to 100. Netflix is now under buy conditions. Comcast under buy conditions, Oracle under buy, Simon Property Group, it's under buy, but it's underperformed the original signal entry. Texas Instruments is doing well. So Google, so Alphabet, so this switch from sell conditions into buy here at around $1,000 a share. It's rallied 25% just in the last 5 months. Chevron Corporation is under buy. Boeing, we're steering clear of that for the moment for obvious reasons. Starbucks, so like McDonald's, this comes onto our radar at around 80. We're probably pretty close to support where it is at the moment. Certainly if we saw it sub 80, it becomes an attractive buying opportunity. So when we think about the US market, we think about it in a similar context as Australia, where you want to have a certain number of defensive names in your portfolio, and we're keeping an eye on these and focusing our attention on them when we have the algorithm buy signals. So McDonald's, Starbucks on the radar. And then getting growth in portfolios through names like Alphabet and Raytheon and so on. Kinder Morgan, I'll just a couple of these I'll skip. Union Pacific, we like that. JP Morgan, we've been overweight that. Mondelez, not really doing too much there, or in MetLife. Visa, our preference is is Amex over Visa and Mastercard. PayPal, so that that at around $100 is interesting. So infrastructure there with Southern Cisco at around $46. We haven't added that one into portfolios, but we think it's probably getting down to a level where it's value. We like IBM. IBM's made a large acquisition of a company called Red Hat in the US, which is a substantial cloud servicing company. So when you think about the dominant players, obviously you've got Amazon, you've got Microsoft, you've got Google, Alphabet, IBM, IBM sort of struggling with falling revenues from their sort of legacy business, but trying to shift more across to cloud and cloud services. And we think that the company probably succeeds within that space. So IBM we like. Disney, so just highlighting the price gap there in Disney back to 118. So we'd certainly get more aggressive if we saw it back down around 120. Verizon switched from sell conditions to buy there at around 48. It's now trading 60. So Mastercard, so it's one of the better performing stocks in the US model, switched from sell conditions to buy there at around 150, now pushing 270. And we've just had another round of buy signals there at around 250. So order preference is probably American Express, Mastercard, then Visa. Nike, this has done very well. Obviously, US consumer spending's been a highlight of the economy. It makes up 70% of the US economy, and Nike's really been positioned well to benefit from that. We've seen the stock rally from sort of the recent signal there at 70, albeit if we go back even into 2017, it was under buy conditions there at around $50, now pushing 90. Pfizer, we like this. They've seen this as a slightly refocused company. They've spun off some of their patents and assets into a particular division and remain more focused on the products suite that they have at present. We think that starts to create better earnings results for Pfizer. So we've been buyers of that at around this $35, $36 level. Lowe's not doing it there at the moment. Microsoft, again, been one of the better performing stocks, switched from sell conditions to buy conditions there at 50, now pushing 140. Adobe, back under buy conditions, so it corrected from 312 down to 270, and it's under buy. And back to Procter Gamble. So if you're not familiar with the technology, so again, the idea is when it switches from sell conditions into buy conditions, it gets added into the model portfolio. You can come in here and look at any of the models. If you want to get notified when a stock's added or removed from the model, just make sure you click on that envelope, turn it from grey or black to green. If it's green, like for example this one here, that means that I'm getting email notifications when a stock's either added or removed to the model portfolio. If you'd like to know more about the technology, or you're ready to sign up for it, then don't hesitate to give us a call in the office. And then finally, I just want to finish off today with just the notes here that we want to make sure that you're thinking about. So in the US, Raytheon's been overweight, Alphabet, Wells, I'll update these, but we'll add in McDonald's, we'll add in Starbucks, so I'll update those. In the ASX, Amcor, as I've discussed, BHP buying quality within the resource space. Oz, I think, is a little bit expensive at the moment, so we want to see that pull back and buy on the dip, but the long-term story there around both copper prices and the expanding production makes Oz interesting. Woodside Petroleum, I think, is a buy at the moment. I think both BHP and Woodside benefit from stronger oil prices. Gold recovery, have a think about which names you want to be starting to look at there. Our preference is North Star at the moment, but as I discussed, Evolution's got a better dividend yield. So if you're on the wrong side of how gold plays out, the dividend yield in Evolution provides a bit more sort of security, if you like, around that opportunity. Transurban, I think that rallies into the December dividend. Part of that's already underway at the moment. Goodman Group, we continue to like that. GPT, we like that. Coca-Cola, to me at around $10, that's starting to get down to good value. Webjet was oversold at 10. It's probably more than 2/3 of the way through its recovery. A2 Milk, maybe start to keep that one on your radar, and I'll update you on the blog. And then let's just have a look at a couple of these ETFs to finish on today. The first one here, cybersecurity ETF, hack. So under algorithm buy conditions, support looks to be around 675, and it appears that we could see this sort of push back up to around $7.50 there. India, probably one of the faster growth opportunities globally. They've just lowered their corporate tax rate in India, and similar to what Trump did in the US a few years back. That should start to flow through to repricing of equities, and we're starting to see that where the index has really rallied 10% in the last few months. So that Beta Shares India Quality ETF, that's something just for you to have a think about. In Asia, their technology stocks. This is sort of a little bit expensive at the moment, but next time if we think about it, the algorithm signal there at around 550, now at 650. If we were to see a correction, over the coming months or into the early part of next year, pull back to around $6, we'd take a look at that Asia technology ETF. Right now, at the moment, the QRE, which is the resources, just gives you exposure to really BHP, Oz Minerals, Rio, as well as some of the gold stocks all through one basket. We've just started buying that. We'll look to trade out of it at around 660, 670. And global tech stocks still an area that's delivering growth. So